So we now come to the last panel for our day, where we want to hear from those who are not necessarily doing the adapting, but from those who set signals, provide incentives, and can enable adaptation through regulation, but might also be perceived to be standing in the way of adaptation sometimes. So the theme of this panel is adaptation frameworks and incentives for action. Our panelists are Tim Henshaw, Tricia Smith, Jack Bisset, and Karen Lavin. Tim is Head of Agribusiness at Westpac, so he has a customer base that is clearly dependent on the natural environment, and he sees adaptation as critical to ensuring both physical and financial resilience. Tricia is the Chief Policy Advisor to the Deputy Director General Policy and Trade at the Ministry for Primary Industries, and she spent many years working on climate change policy and the implications of a changing climate on land-based sectors. Jack Bisset leads on the strategy aspects of climate-related disclosure standards for the External Reporting Board, or XRB, and Karen is Adaptation Manager at He Pou, Rangi, the New Zealand Climate Change Commission, and is focused on establishing the Commission's independent adaptation and monitoring functions. So you all work in organizations that set signals that identify and require disclosure of physical climate risks and company responses to that, and that regulate or enable actions for adaptation. And we've had a lot of conversation today about why that's actually really important. It's national frameworks under which smaller scale action can happen. It's providing financial resources for people to experiment, to actually allow entrepreneurs to rise up, in order providing a continued buffer for failing, which is part of trialing and moving ahead with new things. And we've had a lot of conversations about a degree of tension between externalities and how to integrate them into decision making without ever pretending that it's all the farmer's fault that externalities occur. So really keen to hear your reflections of how you see your organization, your company engaging in that, and we'll have a conversation about that with more questions from you, the lovely audience and participants. So Tim, should we just start with you?
Yes, thanks Andy. Kia ora, great to be here. Wonderful kōrero in that last session. There's a lot of thoughts going on in this room. It's really impressive. If we jump to incentives and how we're thinking about it, I head up our agribusiness, so we have 3,500 farmers and growers out there that are thinking about adaptation and the challenges that are coming at them. And I like to think that because we are an organisation of scale, that we have some resources that can help with that. And we want to help. We are stakeholders in those businesses. We provide capital in those businesses, so we share those risks. We see the impacts of climate change. I've been in Gisborne and Hawke's Bay a couple of times since Gabrielle, back there in a couple of weeks. The need to do that, helping is super important. So we've come at it from a bit of a three-tiered approach, which is provide really good information, provide really good research, and we've been able to do that with partners because we're not experts in that, and partnering with Lincoln and Anita and the team to provide a central report on all of the impacts of climate change, risks and opportunities for the agri-sector in New Zealand. We've been able to do another one with Economics, Phil Genoa on on-farm greenhouse gas emissions, and again using experts to provide information to our customers so they're better informed to make good decisions. And a key in both of those reports, tangible actions they can take on farm that are working and are proven. The next layer is we provide information, then we also want to provide incentives. We think this is really important for this to happen really quickly, or for action to happen really quickly. you can have a good why, but if there's an incentive to actually get moving, that's going to help. We've come at that in a couple of different ways. We've launched a sustainable farm loan, whereby if a farmer or grower commits to meeting a set of standards, we will give them a discount on that lending for all of the lending on that farm. So we are treating that farm as the sustainable asset. Within those standards, there is a climate change adaptation plan requirement. So there is a direct link to the incentive through to climate change adaptation as being one part of that plan. Not every farmer or grower wants to go that whole hog, and there's other businesses out there that want to do individual things. So we've also launched a sustainable business loan, where if you've got a project and that's going to help with your climate change adaptation, we will give you an incentive on the lending on that particular loan as well, and that could be upgrading your effluent plant, solar panels, whatever that may be. So again, very closely tied to adaptation, tying the incentive to that action. The last one is just the point that John brought up earlier around catchment groups. We think catchment group work that they do is amazing. We think that works from a geographic sense. It's those communities and landholders in those areas that are doing that work and brings great buy-in for those projects. So we think that's a fantastic way to go, and we've partnered with New Zealand Landcare Trust to provide an incentive of 6 grants across the country for projects to help see those catchment groups get up and running so they become the future Waiwanakas and Mohaka catchment groups as well, and builds momentum at a catchment group level as well.
Kia ora koutou. MPI has quite a range of operational areas, including agriculture investment services, Biosecurity New Zealand, Fisheries New Zealand, Food Safety New Zealand, Te Rako Forest Service. So we actually have quite a reach into the production systems, but we also are very active both in the policy and the trade spheres as well. So we sort of range from paddock to plate. Similar actually to Westpac in terms of supporting and incentivising both catchment groups, on-farm research science through the Sustainable Food and Fibre Futures Fund. So we've got a few advisors here today. Our on-farm support people who reach out to farmers as well. So I think we've got a couple of people as well. So I really invite you to catch up with them today. They're doing some really, really wonderful work. We also engage at a national level in terms of the Interagency Executives Board. So there is about half a dozen CEs who actually sit down monthly to discuss where are the key climate change priorities, including adaptation. And we've also co-chaired 2 of the Aotearoa Circle, the seafood and the agricultural sector roadmaps that have been done. So just looking at my list, we also have risk management systems. I think the interesting thing about MPI and land-based systems, we're not just climate sensitive, we're actually climate dependent. So we are already managing risk, and I think we heard earlier today that there is no need for adaptation. I think that the everyday management of climate risk on farm is bleeding into adaptation, and actually that will lead to transformation. So I think there is an element sometimes of talking past each other and just acknowledging that work is going on, and that embodied science is actually happening on farm as well, and it's really important to feed that back into our science and research programs. And actually I think that sums up MPI.
Thank you, Jack.
Kia ora everybody. My name's Jack Bisset. I'm a policy manager from the External Reporting Board. So what's the External Reporting Board, you may be asking? Is an independent part of the government that has always set audit, accounting and assurance standards, and now more recently we've also been setting climate standards too. So effectively central government gave the XRB the mandate to write financial reporting rules on climate, and that's what we've been doing over the course of the last 2 years. And this follows a global trend in this area whereby many countries are now writing similar rules, all with the genesis in a voluntary initiative from led out of the Task Force on Climate-Related Financial Disclosures, which is an initiative of the Financial Stability Board, really coming from a speech by Mark Carney, the Bank of England governor, who said, back about 10 or so years ago now, that we have this tragedy of the horizon when it comes to climate change, and that financial markets globally are not pricing in the long-term impacts of climate around both our physical impacts through to the transition impacts as well from a shift to a low emissions world. So the rules we're writing are very much off the back of that, which really is an emerging consensus globally around what investors, creditors and other lenders are actually expecting from particularly large, more sophisticated organisations that are privately run, or publicly run, with ability to invest in them, which is that not only are you expected to be able to communicate what your assets and liabilities are and what your board and governance oversight looks like, but now it's also, well, what does it look like from a climate risk perspective in terms of governance, risk management, how's it being integrated into strategy, what are your scope 1, 2 and 3 emissions and your other metrics. So that's the space we've been in, which is largely kind of writing the rules, but we've been attempting to be as collaborative as possible, given this is such a new and emerging area. So we've done a lot of work over the last 2 years to really encourage sectoral collaboration, and that's been much more successful than we'd anticipated, with now about 15 different sectors coming together to develop shared climate scenarios, which is a way to build a shared understanding of what the climate-related risks and opportunities for that sector could look like, including the banks. Tricia's touched on a couple, and agriculture as well.
Thanks, Jack.
Tēnā koutou katoa, ko Karen Lavin toko ngā. As Andy mentioned, I'm the Adaptation Manager at He Pou, the Climate Change Commission. So the Climate Change Commission was set up in 2019 to provide independent, evidence-based advice to government, and also to monitor the government's progress against its climate goals. And I think it's worth just emphasising that term evidence-based. So we draw on a wide range of evidence to inform our work. That includes Matauranga Māori, it includes Western science, lived experiences, it includes extensive engagement with our partners, stakeholders and researchers. So I'd say that research and information generated from researchers and from all of you in the room is really vital for the work that we do at the Commission. In terms of adaptation, the Commission has 2 main roles. The first is carrying out the National Climate Change Risk Assessment, and we'll be completing the second one that's due in 2026. And the second task is monitoring the government's progress on its adaptation goals. And our first monitoring report will be due in August next year. So for both of those tasks, it's really vital that we have a good understanding of climate risks and resilience, and it's at a national scale. We draw on all sorts of things that are being produced by people in this room and others around the country, things like downscaled climate projections, information on the changing frequency and severity of extreme weather events, information on exposure and vulnerability to climate-related hazards. And we also look internationally as well at what best practices and what we can learn from our overseas counterparts. In terms of how we draw on research and expertise, there are all the usual ways. We read widely and we talk to a lot of you. But I would say that it can be really difficult for us to know what's out there, who knows what, how to access the information that's there. That can be really complex for us. In addition to that, some of the things we need to do are really complex, and I think it's just worth acknowledging the collective expertise that we all have. Each of us comes at this from quite a different standpoint, and that's really valuable for us, and we've found that some of the most valuable situations have been where we've brought a number of experts together and we've been able to bat ideas around and tackle some quite complex things, and so that's been very useful for us. I guess I'd just finish by saying that for me personally, I think coordination is one of the single biggest challenges. I think Jack just talked about it, bringing sectors together to talk through some of this, that collective brain. I think that's really important in this space. You never know what the next person, the person sitting next to you is thinking through, and it might be very similar to the sorts of challenges that you're facing, so I think that's really vital.
Excellent, thank you. Just want to pick up the first question that popped up on Slido, which is sort of more going towards you, Tim, is sort of the question, to what extent do so you talked about the sort of preferential or lower interest rate loans, to what extent do they support a farm systems change rather than an improvement? Like, to what extent is an ambition that a farmer may have to do a more substantive change jeopardizing their ability to provide enough equity against a loan that they're asking for? Is that like, is there something you want to see remain in place in order to lend to a farm to become more sustainable? So is there a trade-off inherent in a bank lending model?
Yeah, it's a good question, and I think Kate and Joe picked up the point really well in the earlier panel. Is you have to ensure that those operations maintain financial viability. There has to be a just transition. There has to be profits delivered through that. So betting the house on it is a risky strategy, and what we're probably seeing more similar to Kate's system is that people are diversifying their systems, which are bringing more resilience to that farming operation and letting them to try and trial things without taking too big a risk. And you do see a few white crosses beside the road on people that take too big a bets and think they understood the risks of a new system, but understanding a new biological system that you have learned over generations is very, very, very hard. So getting very, very good advice, taking the right steps to trial that and bring your expertise up would probably be the way we would want to support people doing it, so they're not putting themselves and their businesses at risk.
I guess while keeping in mind that experimentation does come with failure, and so for me that raised the question whether something else other than a bank loan is needed to provide for that, not fail-safe space, because you don't want to say anything goes because we'll always got you covered, but at the same time, if you must not fail, because otherwise, the bank will have whatever's left.
Yeah, that's
It's
right.
not going to be helping, is it?
And it becomes a very good discussion amongst the shareholder for that business of who should be taking what risk and what part the bank plays in there as the debt provider, not the equity provider with the upside. Yes, we absolutely want to support. We've got a role to play. We want to help through maybe sharing ideas, connecting the right farmers and advisors with that network as well to try and support them make that change in a way that maintains the strength and resilience of that business.
And I'm really sorry, I'm not wanting to pick on you, but there's lots of questions popping up to do with banks.
That's what I'm here for.
So I'm going to ask you, and you can pivot away and talk about the weather. So two questions that are related in that space. One is there any way to support people who want to get out of farming entirely, but need investment for something else? And it might be an investment that a normal bank loan might not cover because it is, again, risky. I'm paraphrasing here because I can't multitask, talk and read at the same time. And the other thing is, are there ways for banks to send signals about risk avoidance, like you can incentivize becoming more sustainable, but other than simply not lending, is there any other ways of sending signals to say, look, you've got to stop doing that because I see there's a problem, but let me help you?
Yep.
Is there more nuance than just say, well, go somewhere else if you want money?
Yeah. I think first and foremost to the second question, we want to help and show them the path with the incentives to do the right thing. And I think banks are one of the key stakeholders to those businesses, but there are a number of key stakeholders that want them to do the right thing as well, and that's the consumer, that's the supply chain. So everybody's sort of in that together. Yeah. Will we not lend to them? We don't really even want to think in those terms because our job is to help and work with them. There are aspects of our assessment of a customer that the bar is going higher, and that's around the ESG assessment. So are you meeting all the requirements under your consents and doing everything you need to do? And we're doing all financial institutions will be doing a more rigorous assessment on ESG than they would have 5 years ago. Will that be more rigorous in another 5 or 10 years? Probably. So the minimum requirements are probably moving up across the board. And yeah, but my message to my team, get out there and help to get them on the right track, because yes, the bar is going higher, but we'd rather have a job on the helping side. I think the first question was around those not quite bankable propositions outside farming, and I think this comes back again to the role of equity providers and debt providers in the finance sector and the economy, I suppose. So banks are good at providing a lot of capital, and the less risky your business is, the more capital that can go into that business from the bank, and the return on the equity side will be higher. So we are looking for consistent cash flows. What I see us doing on things that are sort of outside the normal banking parameters is just working really hard on constructive ways to engage and help them along that path with connections, putting them in touch with the right people that we know can help fund something, get it off the ground, become as a passive or active shareholder into that business that we know is going to help, and 2 and 2 is going to make 5 instead of just the simple 4.
Great, thank you. I do want to broaden out the conversation again. And I mean, one thing that struck me is that we talked about the need for adaptation to occur across multiple scales, and yet what we've heard was, I think, is bipolar too strong. It's at farm level and it's at national level, and I mean, and 6 loans to catchment groups isn't going to cover them all. So I guess I'm keen to hear from all of you what you see as ways to help that, that large stretch in the middle, to ensure cross scales action and avoid a showdown between national regulation that is always going to be precisely wrong when it comes to the individual farm.
I guess for me, probably one of the things that we've missed today is probably our colleagues in local government, and I want to put a big shout out to them because I've worked in local government before, and it's really hard. That's where a lot of those decisions are made at catchment levels, and that's where communities decide collectively what they want for their future. So I think that's got to be definitely part of the conversation. And as you say, there is a tendency to go from the government did something right down to, well, the farmers didn't do something, and it's actually the story and adaptation's a lot richer than that. And I think there is something in terms of, and we have heard it talked about here today, collaboration and trust and respect in terms of sharing the various knowledge and the systems, and actually just acknowledging that systems and scales often come with different boundaries and different outcomes, and we just need to be really cognizant of which system, which boundaries we're working within, where do we have the most impact, and how are we actually coming together to have a coherent and comprehensive approach to where we want to be in New Zealand, because this really is about, at the end of the day, what is the long-term view, where do we want to be in the future?
Yeah, I'll add to that a little bit. So obviously the Commission's role is at a national scale, in saying that we're very conscious that adaptation is inherently local, and so we put a lot of effort into thinking about how we are going to do our role at a national scale while factoring that in. So I guess there's a few ways that we think about it, again through that engagement, and we're carrying out some place-based case studies as part of our work so that we can get the more granular information that you start to lose when you're working at a national scale. The other aspect to it is when we're doing our work, thinking about how that fits in with what, like for example with our National Climate Change Risk Assessment, how does that work with the regional climate change risk assessments that are happening? How does that work with the sectoral and the business level risk assessments that are happening? How does that work with what iwi and He Pou are doing? And so that's how we try to factor some of those things in and try and do things in a way that we think can be helpful for others to learn from. But obviously we're very conscious that it's aggregated up, and that is an important part of the system, but it's definitely not the full part of the system.
And just one slight correction, there are 6 cash grants, not loans, and it's per annum, so we're up to 18 across the country. And I'm taking names for volunteers for planting days and pest control if anyone wants to come out and join cleaning up and improving our waterways. Excellent.
I stand corrected with grant versus loan is a non-trivial difference. One thing that hasn't come up much today is the role of insurance, and I guess sort of looking at you, Jack, in the sense that special disclosure is meant to inform investor behaviour, but also obviously is something that insurance providers can then look at and make their own choices based on that. Any thoughts on this? So nobody on the panel is working in insurance per se.
Sure thing. Well, one of the most interesting stories I've heard so far from an insurer, who I can't name or speak on behalf of course, but there's, I think, a lot of focus when it comes to insurance meets climate risk around where will they retreat from in terms of what areas are most highly exposed. But there's a real challenge for insurance, which is that they actually need to remain profitable to insure more broadly, and it's actually that challenge of working out how will they remain profitable, which is incredibly difficult and is a strategy question, as opposed to climate and physical risk being purely a kind of risk management risk issue around, well, where will they just see that there's a red map with a whole lot of underwater houses and so they're going to retreat, which they are also going to do. But in this whole climate disclosures world, I think we've started the conversation from a climate risk as a material financial risk, and therefore thou must all be managing it just like all other financial risks as part of directors' duties. Now there's legislation that says it also has to be disclosed, and that's starting to now move through to, okay, well actually what does it mean for corporate strategy for banks, insurers, investors and corporates, and that's where it's quite interesting, I think, and where there's still a gap in terms of some of the strategy frameworks and approaches, and where this community of research can hopefully connect up a bit more with the corporate strategy world. So talking to an insurer, they'll say, well, in a 1.5 degree scenario, our main area of business is, say, car insurance, but in a 1.5 degree scenario, we'd expect a whole lot of mode shifts, so not particularly many cars on the road except for a few more EVs. So there's sort of their revenue gone in that sense. And then in a 3 degrees or greater scenario, the hazard of hail alone would be enough where they basically don't want to insure any cars. So then the question is, well, what is our new main line of revenue in New Zealand, and how will we, from a strategy perspective, work out where the opportunities are and then actually realise those? So for me, this sort of insurance conversation is still a bit in that red, blaring bad parts of the map, but we really need to be more inclusive of insurers and the insurance sector, and be more valuing of the actual role of insurance, which is to help manage risk, and find ways where we can actually make some progress in terms of the way forward.
Great, thank you. So related to that, there was a question about innovation, in the sense that we talked about the need. There's experimentation, which is not necessarily a technological innovation, but there is a clear role for new technology, like virtual fencing came up earlier today. It's really, really important technology that needs to be developed, trialed, brought to market, etc. What do you see as sort of enabling systems for that to actually, because it will need private sector investment. It's not something you just do based on, if you're a farmer, you're not going to in yourself develop new tech necessarily. You rely on somebody to do it, and then you're an early adopter maybe. So what are systems ingredients that we either have or that we should have more of to encourage more innovation that can have adaptation support, more efficient irrigation, etc. Wherever there's existing pressures, innovation happens, but either where there isn't the pressure, but we know that we will need it in 10 years' time, or where there's no financial value right now and therefore no return on an early investment, we struggle. Do you see ways of bringing that forward so that we have the tech that we might need in 10, 15, 20 years' time? And, breeding new cultivars is one example where you can read the tea leaves, but is it fast enough? Can we accelerate it?
I can have a go if you like. I guess so MPI itself works with a lot of people, including beef and lamb and dairy NZ, and we really situate ourselves at that applied end of the spectrum of science and research. So I mentioned the Sustainable Food and Fibres Fund, we have the Sustainable Land Management and Climate Change Fund. I guess you could use them in part to seed some of the work in that, but I think you're right in terms of our research science system, investing at that end where you can test or you can change is really, really important. And for me, I guess one of the things I'd really reflect on is there's a lot of really interesting work going on our farms and on our production systems. I remember as a kid going onto a farm and just seeing all the farm diaries, which was just full of all this amazing information. How do we feed that back into the science system? How do we bring the engineering people together? How do we bring actually the flood protection engineers, the drainage engineers together to have those conversations? And in part it might just be an awareness that that's something that's lacking. Apart from that, I don't know of any angel investors that could help us in that part of the system, but I think in terms of how we construct our science system, we really do need to have that long-term view from blue skies through to, as you say, what can we do on the ground to make whatever we're trying to achieve get there faster, quicker, or more effectively.
Thank you. But we only have another 7-8 minutes because we do want to close and wrap it up, but there's a couple more points in the questions. So one is, it goes back to, like we talked about, sort of very data-rich information that can inform farm level decisions, catchment, sort of trade-off choices, but a comment that, look, this is incredibly complex, and the Commission has to plough through horribly complex stuff and try and make it accessible at the national level, which is always going to be too broad brush coloured in to be of great use at a smaller scale. So is there a role for more formally vetted portals to not just provide climate information, because we're working towards that, I understand, but more adaptation ideas, because you get all sorts of snake oil merchants coming out of the woodworks. And so what's the role for some filtering for more trusted assessment of what's a good idea and what's a bad idea, or is it always so context dependent that you have to actually look at it? Talking too much. Anyway, I got my question. Looking for ideas.
Yeah, I know Jack will have comments on this one, but yeah, absolutely, information is vital. I think from what I see, there is a lot of information out there. It's just knowing where it is and it being in an accessible format, and so I think that's really key. I do think that we can also get stuck on the data and information, and we can get focused on just digging deeper and deeper and deeper, when in reality there's actually a lot that we know. When we look at the extreme weather events that we've had, a number of times that we then see a map that overlays really nicely with that, it just shows that we actually did know about that ahead of time. So it's not always about data and information, and I think we need to be careful about constantly saying that's the issue. I think we need to really seriously be looking at the systems that we have in place and what we need to do to fix some of those things. So why were those homes built in those areas to start off with? That's where our challenge is.
It's not the crowd controlling this, is it, when we get more or less interesting? Yeah, I mean, I agree with Karen's point that there's the first leap is often we need lots of data and where is it all, and then what we really need is to get better at dealing with uncertainty and also, in my perspective, increasingly find ways to bring this information into decision making, which increasingly the question is, so how are decisions being made and how do we improve that and make it more fit for the kind of information we're trying to draw in, as opposed to just here's adaptation and here's adaptation frameworks and information. Yeah, I mean, I guess what I hear in this climate data space from a lot of the climate reporting entities, of which is around 200, is that they are finding that we have an overly commercially run approach to our CRIs, which means that some players in particular effectively having to enter into the consulting end of the market just to cover core research, when really what we need to be doing is funding the core research properly, and then we'll have a more vibrant and more better organised kind of consulting market that adds value on top of baseline climate research. So I do think that there's still progress to be made there, and there's a sense of frustration and impatience growing, I think, the longer that this is not resolved, particularly as New Zealand's a leader on climate disclosure. So I think that this is becoming increasingly a red alert issue for some.
Yeah, thank you. I've got two more questions I want to get to. The first one is following up on that space. Looking at the research that's taking place, are you getting what you need? Can you use what you need? Is there something that you really wish New Zealand would do differently or better? Not a criticism of anybody in the room, more what does the system produce, and how does it measure up to what you feel you need when you look at your day-to-day decision making?
Happy to start. Yeah, I mean, I think that there has been a huge wave over the last 2 years in the international space with climate standards, and I think that what those bring in for the global community of corporates, banks, insurers and investors is basically a language. So I do think there's a need for all research parts of all countries to sort of turn around, engage more with, well, what are the words, what's actually that language? It's kind of partly got its roots in the IPCC, but it's also slightly different. It has some words like transition plans that have their own meanings, and so there's a bit of a case of, well, how do we make sure these languages are not different depending on who you're talking to, and I think that that's a risk in terms of where we're at the moment globally, is all of a sudden the business community and the sort of accounting and audit and assurance world's got all these terms that are trying to help corporates communicate and deal and manage these issues. So there's a case from the research end to look back up at that, and the area that in particular where I think we need to really fuse is strategy and adaptation and mitigation, which is if you accept that this is an issue, climate change is an issue that affects corporate strategy, then we're at risk, I think, as the adaptation world and the mitigation world and the climate policy world to say, here's a framework for you to use for decision making. But corporate strategy has been around for a lot longer than climate adaptation frameworks, been around for 100 years, but they're not necessarily, the frameworks are not always fit for purpose for dealing with this kind of uncertainty and complexity, but some approaches actually are. So how do we basically start more with existing corporate strategy frameworks, and particularly ones that are being used in New Zealand, and then build more physical and transition risk considerations into those, instead of kind of having a reporting-led framework or an adaptation sort of research-led framework. So I think that that's a ripe space the more that this all comes together.
I have to say accessibility for me is really, really keen. And Andy, as you know, I spent 5 years leading the MPI adaptation program way back, and I knew everything that I commissioned. I crawled in and out of the research. At the time I was still doing some work on water policy and a little bit on general climate change policy, but I realised I was inhabiting a world which I actually had access and I knew how to find everything. Now 10 years later I'm coming back and I'm looking at the websites and it's like, where did the climate cloud go? Where is all the stuff that I know that I commissioned that is no longer really easy to hand? How do I get the real good oil? How do I know the so what? And I find it incredibly frustrating because I also know a lot of the work that we did do back in the day is probably still fit for purpose. From what I've seen, and the work that we commissioned 15 years ago, everything is happening the way we thought it was going to happen. It's just happening quicker. So when I sat in the webinars in the last couple of weeks, I want to know, is there any difference? And it doesn't seem that there is. But often when we get the results in new research, it doesn't reference the earlier research. Are there some thresholds in there that have surprised you? All of the things that we set in motion in good faith, going, look, this is a policy issue, we think you should invest here. Is that still a good investment? So there's some of the things I'd really, would help us in terms of policy. And, to Karen's point, there is still a lot of information out there, but there's a lot that's hidden as well, and it's just frustrating.
I'll probably just add a general observation, agree with those points, and I think there is still a long way to go in the general maturity of being able to assess that information from mum and dad farmer through to corporates, and a way of doing that in a succinct way that actually helps the user get those insights and make good decisions of it. And I think we're still at the early start of that maturity.
Yeah, in short, accessibility is my one thing, and I think we need to think really carefully about the role of science communication as part of this, and I think we've seen from national science challenges that can be done really well and how useful it is. So I think we really need to focus on how we get that information out there.
I just want a very last question, and a little bit drawing an arc back to what Lauren talked about early on, which is sort of multiple riskscapes, the more you look out. And a term that hasn't been used much today, but is sort of active in the research area, is maladaptation, where something that looks like a good idea at a certain scale looks like a bad idea at another scale of another system. Do you see a role for yourselves in regulating that, which always comes with the risk that you know better than the people who are doing the adapting of what the right adaptation choice is? How do you... It's an open question, it's not a leading question, and probably the last question, so take it as your wrap-up thoughts as well. Who's brave enough? Come on.
I think that is a real risk, and I think that probably goes back to the point that we have seen train wrecks where people think they were doing the right thing. Great intentions and execution meant that that farming business didn't survive. So I'd go back to the point of understanding the risk tolerance of your business to be able to take those leaps, because we want you to take those leaps, but understand what you can do that's not going to bet the house on it. And probably just a wrap-up comment. Fantastic discussions today, and I think someone talked about the areas of the sports field being science and policy at the other end. I think it's only half of the field, and I think the other half is farmers and growers, and then there's also the support network for farmers and growers, being the farm advisors, the lawyers, the accountants, the bankers, and all of that ecosystem that supports the farmer day to day. And we need to be connected up right across there in terms of the language that we're speaking, how we're thinking about things, and my massive encouragement is to go on farm and have those discussions and go on farm and talk about those things. Get around the kitchen table, have the scones, have a cup of tea, and have a chat, because I think once some of these ideas and concepts and research, when a farmer can sit down and absorb that in a safe space, I think you'll start getting more ideas flowing. And to Kate Hackland's point of those farmer-led solutions, maybe the role of this room is to spark the idea in the first place through sharing that research and ideas, and then supporting farmers take it forward.
I totally support that, and we shared some stories earlier about talking with farmers and just realising actually how innovative they are. And I'd actually even put out the challenge there, how about talking to some farmers and see what their research priorities are for you, and actually just turn it around a little bit on its head. In terms of your original question about regulating for maladaptation, that blows my mind a little bit because I'm not sure what you would regulate or how. But I take your point in terms of, investment priorities or the policy decisions that you might do. I don't think there is a way of actually dealing with maladaptation apart from the fact that we do take more of an adaptive approach to management, and we're mindful about what's happening and what's our long-term goals, as well as what are some of those shorter-term outcomes we're trying to get to. I think that's the only way you're going to find out whether you're sort of in a maladaptation space.
Yeah, I think it's a real challenge, this challenge of potential maladaptation, and I guess the standards we designed were, in many instances, we made decisions trying to avoid the world where physical and transition risks are seen as two separate buckets to worry about, and I think that this is a difficulty in New Zealand where we're tending to have smaller organisations dealing with climate change than a global scale, but the bar globally really, I think, is increasingly that you're managing your physical and transition risks, and that you're doing that in an integrated manner so that you're not starting to reduce your emissions through a whole lot of investment, which is actually furthering your physical risk, or vice versa. And I think the tool of scenario analysis in there is intended to help with that, but that effectively assumes that you're doing it quite well, I think, to actually be able to pull that off. So, I think that the ways around that are to really do your best to bring transition risks and opportunities as closely together as you can with adaptation challenges. And I guess the other thing I'd say is that for agriculture in particular, it feels like a real sectoral challenge, including in New Zealand, which is every single sector and entity globally is increasingly expected to be able to say, how resilient is my business model and strategy to a 1.5 degrees or a 4 degree world? And they are expected at that point to be open to changing their business model and strategy to something that's maybe outside the traditional boundaries of that sector. So if you're in New Zealand, we're just culturally sort of writing everything else off on the basis that we farm the land and therefore we will continue to farm the land, which I can completely understand. We're shutting off options and we may be not exploring risks. So there's just kind of a global context here of, if we're just deciding these things too early, then that itself may be some of the biggest source of risk. So think broadly, do your best to bring in diversity of thought into these processes so that you can really challenge yourself.
Yeah, and I guess from our perspective, maladaptation is a really hard one to factor in, and so where we've sort of landed on it is factor in good adaptation principles, and then maladaptation is sort of an outcome of that. So we're still sort of banding that around, and we'll see where we land on it, but it's a pretty difficult one.
Yeah, it is. Well, I found it a really useful discussion. Thank you very much, and please thank our amazing panelists.